Hey everybody, Steve Olson here with the Peak Group. I'm glad to have you listening to the webinar here that we're going to do. It's a quick refresh on one of the main markets that we operate in right now, which is the Birmingham, Alabama market. It's unique. It's one of our primary markets along with Dallas, Fort Worth, and we also have some strategic partnerships in other markets like in Tennessee, in Indiana. But this one is unique in that we run our own property management, our own general contracting in Birmingham, so it's kind of home away from home for us. And I found it's always beneficial to do a quick refresh on these markets and what they offer and what some of the pros and cons are. And so if you've been thinking about cash flowing properties and you're wondering what markets that may make sense in, I think that this is going to be a useful check-in for you about Birmingham, Alabama. So let's talk about it. First of all, Birmingham, if you have never been, you should go. It's a beautiful city. It's very rolling hills and heavily wooded. A lot of excellent food in the Birmingham, Alabama metro. We certainly love it there. And when it comes to being an investor on cash flowing residential rental properties, what you see on your screen here are some of the key attributes that I think Birmingham offers. It has high rents, it has low expenses. And when I say those, I say them in the context of the overall price of your, garden variety rental property, right? Some might call that a rent to value ratio that we'll get in just a minute. Birmingham has a low unemployment rate and it is business friendly and it is growing. So it's not a big flashy market like, for example, a Nashville or a Orlando or Dallas. But I think it's one of those sleepers that has all those right fundamentals that the herd has not necessarily caught on to yet. So let's talk about these. Your median rents in Birmingham MSA are $1,200 a door. That can obviously vary widely. Are you doing new construction properties out in the suburbs? Are you doing a C-class property renovation? Are you doing BRRRR? There's all different kinds, but your median is about $1,200. And that's right where we are when we renovate a turnkey property. On our newer construction homes, those rents tend to be, $1,650 to probably $1,850 in most cases. And your median home price in Birmingham is $132,000. That gets you that rent to value ratio of almost 1%. And I tell you, I feel like your grandpa that lived through the Great Depression telling you these tall tales of, a hamburger used to cost a nickel. I used to do these deals and rent to value ratios were 1%, and they have been extremely difficult to find over the last decade as property values almost everywhere have accelerated so rapidly. On the new construction properties in Birmingham, we're usually in the mid twos, and the rent to value ratio probably goes to 0.7, 0.8. But it's that trade-off of lower expenses, lower hassle on new construction versus maybe more hassle and more expenses on older properties, but a better rent to value ratio. And every investor kind of has to make the decision as to where they're at on that spectrum. So we love those high rents. We love these low expenses because, another market that we love is Dallas. But when your property is vacant in Dallas, it's going to cost you a lot of money because it's a high expense market. Birmingham is on the exact opposite end of that. You're looking at insurance premiums on properties of anywhere from $2,000 to $4,000 per year. That varies highly on the property value, your deductible, the nature of your insurance policy, but they're quite low. Compare it to, I own a fourplex in Houston, Texas, and my property tax is about $21,000 a year. My insurance premiums are massive. There's other reasons I like that deal, but if you like low expenses so that you can ride out any vacancy, which you're going to have from time to time, it happens, then you'll like this Birmingham market. And additionally, your property taxes are extremely low. We can send you sources for our data in this deck at any time, but just know property taxes in Alabama are the second lowest in the nation, only beat out by Hawaii, which is just going to clobber you with other things. I know I've tried to do a deal in Hawaii before, and that aloha spirit, not so much when you're dealing with the city council on new development. Let's talk about low unemployment. So the Birmingham metro is a 2.6% unemployment rate. The U.S. average is 4.3. That data comes from the Bureau of Labor Statistics. We did not make it up. So when you look at this, people are working, they are making money more so than the national average. There's a need for housing when that kind of thing is happening. And so people want to know what, sometimes when we look into these kind of B markets in the South and the Midwest, are we overly dependent on manufacturing or some other industry? We've kind of got those the PTSD of I was an investor in Detroit in 2007 and the collapse of the auto industry and what happened there, right? That's what people are kind of thinking about when they consider where are these employment sectors. And you can see it's quite diverse in Birmingham. There's a lot of education and health. There's a lot of transportation, tons of manufacturing and automotive, but it's just not exclusive to it. For example, they make a lot of Mercedes-Benz products in the Birmingham metro. A lot of Honda products are two big employment sectors. Regions Bank is headquartered in Birmingham, Alabama, so there's a lot of financial and insurance services, as well as, when you have a big growing metro, you're going to have a lot of those business and professional service providers. So you can see it's quite diverse. We're not going to put all of the employment in just one sector here and run the risk of you all of a sudden not having any tenants that can afford rent because it's kind of a one horse town. Maybe the comparison isn't fair, and maybe I'll get some hate mail for it, but it's like sometimes people come to me with deals in like West Texas or North Dakota or Eastern Utah. These are big oil boom markets that kind of whipsaw up and down. There's not necessarily anything wrong with investing in those markets as long as you know what you're getting into. And additionally, you want to see some other employment come in. I've seen we've looked at Abilene, Texas a little bit, and they've got a lot of data centers coming into that market. There's more diversification happening in the economy, so that could be a market that we start to look at in West Texas. So that's what people are thinking about when they talk about employment. So, but that's what about businesses? And granted, with low unemployment, it would indicate that it's probably business friendly. But you can see the data here from HereCity.com. It's the number 3 lowest cost of doing business, number 3 in regulatory framework. I'm not going to read all these to you, but it's top 10 across the board. Bottom line is, if you want to open a business or if you want to relocate a business, Alabama is a state that is calling to a lot of people that want to be in the South, that want to be in a big enough of a metro where they've got a good lifestyle there, but also where the government isn't working against them. It's making it easier for them to do business, which means they're going to hire more people, which means more people are going to move there. This all feeds off of itself. And, what about a growing and affordable metroplex? Something that I tell a lot of investors about when we consider Alabama is, compare it to other bigger metros in the southern U.S. We're thinking Charlotte and Atlanta and Nashville and Tampa, places like that. All markets that I like. There's a lot to like about those, but they are comparatively very expensive. Not only to themselves, historically, they've grown so much, but to Birmingham. And so as the consumer is continually pinched, as they feel that pressure of, how much money do they need to make a month to live a good lifestyle, they're going to look for affordability. And Birmingham is a prime candidate, being relatively close to many of those markets. It has positive in-migration and job growth, and wages are rising in the Birmingham metro. So what do we do there? I kind of highlighted that originally, but we run our own construction crew in Birmingham. We've got a great team on the ground. We also do home renovations there. Typically, new construction is more of our bag in Birmingham, but occasionally one of these renovations in like a B-class neighborhood comes up, and we're going to grab that if we can. And we also manage our own properties. I think it is important. We're doing kind of a joint venture in Nashville right now, and I was mediating. I don't want to call it a spat, but there was, there was some reconciliation that had to be done between our builder and a manager there. And, they love to point fingers at one another. But when your construction team and your management are under one roof, you just can't do that anymore. What I mean by this is, let's say you're an investor that buys a home and it's not rented, or it's taking a long time to rent. One thing I've seen happen frequently when the construction company and the manager are not under the same roof is, well, the manager is going to say, well, I could rent this, but the builder did X, Y, and Z poorly, So we're fighting an uphill battle here. Now that doesn't make you feel very good. You're going, oh great, but my two key partners in this deal are arguing and finger pointing, and I just need somebody to secure my investment and make sure it's cash flowing. And conversely, the construction company, when they hear this, no, that manager's too picky. We did everything up to code, and they can't rent it out. They're incompetent, so they're trying to blame us and throw us under the bus. In either case, you, the owner, loses. So when we can align the interests of construction and management together, you're much more likely to have a positive experience as an investor. So let's do the meat and potatoes here and look at some actual properties. Proformas, which are projections of the monthly income and expenses, are all provided. And I actually do want to confirm, maybe it's a little misleading to call these proformas because these properties are all rented, right? There's nothing that we're guessing about into the future. We've got actual rents and property tax and insurance bills that we can go off of. And you can see here, this is an infill lot, a home that we built on a vacant lot in Pleasant Grove, Alabama. Very new. The sod just barely went down. You can tell on the picture. And what's great about this property is it's rented for $1,700 a month on a 3-year lease with 3% increases per year. Somebody liked it enough to sign a 3-year lease on this deal. And it's available at a $265,000 purchase price. You can see those low operating expenses. One of the incentives that we have here, and we can help you crunch these numbers, is we give you 2 years of free property management. And so that's not reflected in the operating expenses, but it's really important to know, okay, when the free management goes away at the end of 2 years, what does this investment look like for me? And a lot of times it's just a question of math of, do I want to put 20% down, which is typically the lowest that you can do on a conventional mortgage, or do I want to go 25 or more, or do I want to buy the rate down? Because we have 2 points incorporated into this to help you buy your interest rate down. So if you'd like to get some color around what that looks like, let me know, and we'll get you in touch with JT, our preferred lender, who can say, well, if you do X and Y, then it equals Z, and we can kind of customize a pro forma for you. But this one shows a 20% down. Then you can see that expense ratio is 23%. That's more likely to be a little bit north of 30% once the property taxes phase into this deal. Like I said, it's brand new, it's got a warranty, and it's going to have a tenant there. We just leased it a couple months ago for almost the next 3 years. That's about as easy of a deal that you can do, as low maintenance of a deal that you can do in residential investing. You can see some of the pictures from the brand new build in here, right? We put in that LVP floor, we put in updated and current fixtures, and we like granite counters, right? On new construction, our philosophy is if your rent has a comma in it, you have to put granite counters in now. And you can see the appliance package has been installed. They still got to get the fridge in there, but the dishwasher and the range and the hood and everything are all there. This picture, this is a renovated home, and this is before we got a hold of the landscaping, which you can see is definitely needed, right? That driveway's got to be cleaned up, and the front yard and everything. But as far as a low cost entry point into becoming a real estate investor, this is pretty easy. It's on Sun Hill Road in Birmingham, and it is rented at $1,250 a month, right? We're giving you that incentive of 2 years of free property management and 2 points to buy your rate down. So you're going to have respectable cash flow on this deal for not very much cash out of pocket. Some of you are looking for properties that you can acquire and place into service before the end of the year. You know, I record this in November of 2025, and this is a great one. Low entry point, cash flow right away, and tax benefits that you can put on the books for 2025. Here's another one. This is 820 86th Street in Birmingham, a home that we recently renovated. You can see we had started to get a hold of the landscaping on this one a little bit better. It's rented for $1,450 a month, and it does include those same incentives of property management for 2 years and 2 points to buy down your interest rate. These are just 3 of the homes that we have available in the Birmingham metro right now. This is a comparison that I've started using recently that I think is effective. And I think it's a great helpful way to to think about investing in residential single family investment properties. I have a friend who runs a branch for National Car Rental. And I didn't know this, but he told me that the big rental car companies, they make their money selling the cars. And you're thinking, well, this is a car rental company. Well, the rental is their business model that allows them to carry those cars and sell them at the optimal time. And I think that that's a great way to think about single family rentals, right? If you want to retire off of single family rental cash flow, you can, but it's going to be a big job. You're going to have lots of them. It's a lot to manage. They're scattered everywhere, right? The maintenance, everything associated with it. It's a lot of work. And so most investors, after they own enough of these, they begin to simplify their portfolio and start getting into multifamily other assets that are a little bit more scalable. But there's no denying that these are a great entry point for when you're getting started, because you can, while you're, getting that principal paid down through the rents and you're making a little bit of cash flow, inflation is just kind of eroding at your debt and the property values are increasing over time, especially in a market like Birmingham. So the market does some work for you, gives you some of that growth and that principal pay down so you can scale up. Like those rental car companies, right? People pay to rent the cars and then you sell them when it makes sense. And that's the best part about single family properties. You can acquire them with 30-year fixed rate debt. So as long as you're paying your mortgage, there's no bank coming at you for debt covenants, calling your loan due. It's make the payment, and that really is the end of the story. So if you're looking for low-cost entry points, we would love to have you in the Birmingham, Alabama metro. You can see some examples of our new constructions and renovated homes there. Check us out at thepeak.group or email realestateadvisors@thepeak.group, and you can learn more about how we can help you get started in this market. Thanks again.